What's going on, people? How are we doing? Martin, Andre, what's going on, guys? Hope you're good. I've been working solidly on these indicators. Literally, I worked on them last night, working on them this morning. We're getting there. I can safely say that we have the money in, money out indicator working to the level that I'm happy with it. Ready to roll. Yes, sir. So, we were saying yesterday that we've got a bearish bias on this. Let me get my pen 1 second. We were saying yesterday we got a bearish bias on this, and every single time it has swept a high, it's delivered a move to the downside. So it swept the high, moved down. It swept another high, moved down. It swept another high, and it's moved down. Now, we haven't had the expansive move yet. So it's just a case of having it fully expand into that low. Now you can see, again, you'll see, here's the, again, we are going to come up with a name for this system. For now, we're just keeping it simple. So KIS, keep it simple. We've got the entry points, which we can turn on and off, right? So you can see the 4 hour, and in this case, we will have it so it's tailored to whatever time frame you want it. You know, at the moment, it only has extension lines, and you can add labels and so on. The labels look kind of janky though, so I'm not really a fan of those. So we have that in place, right? And you can obviously set it to dashed or dotted or whatever you want. Then we have the money in, money out. Now, this has a little bit more sort of versatility. It shows supply and demand, which is our money in, money out areas, but it highlights only the supply and demand areas that we want to pay attention to. And then it also highlights fair value gaps. Now, what I've done is I've whited the fair value gaps out, because ultimately the fair value gaps are what we use to define the areas of supply or demand that we want to interact with, right? So by whiting them out, it only delivers the areas of supply and demand that we want to see. So I'll show you what it looks like. And it works like this, right? So it only delivers the areas. It needs a small adjustment. It needs to be brought from here. It needs to be brought to here. So it needs a small adjustment to the right. But notice what it's doing here. It's highlighting the first bearish gap. Wait a minute. That actually needs adjustment, because that shouldn't be there. That shouldn't be there yet. It highlights the first gap that we see. So I'll show you guys. The principle of the Keep It Simple series is following the money in, money out, right? So when money comes in, we know that we create a space. Then money comes out, for example, we create another space. So we know there's liquidity here, right? And let's say our bias is down. We want to pick up on the money out movement after X. So for example, X being a high being ran. So when we get this, we know that we refer back to the point that space was created, and this is where we look for our entry. We use the high as our stop area, and then we use higher time frame low as our target, right? So it's really easy in that point to understand the principle of what's going on there, right? What's going on, Void? Hope you're good. Martin, how come you're such a genius? Oh, trust me, I'm not. Trust me. A lot of help from outside, so my business partner, and then the new Gemini AI has helped a lot too. Because you try and code something like this in ChatGPT, you're going to be there for weeks. So when we go to the daily time frame, we also have the daily bias coming along here. Well, we did. Turns out we don't anymore. On here, you'll see the same thing, right? So these points are the first area of supply or demand. Yeah, change your name. I know, right? That's what your name is on Discord. That's the first area that price is going to go bullish from, and so on and so forth in terms of what we're looking at for up and down movements, right? So we know at this stage there was only bullish fair value gaps delivered until here. So we got money in and we got that movement, right? Then we have money out. Now, because our bias was bullish, we're waiting for that money in to come again. So if I turn the bias, not the bias, sorry, but if I turn the instrument settings to here, right, I can first bullish gap after, so the first money in, first money out. If I turn this to white and this to white, now it only highlights the supply and demand areas that we should be focusing on. But because we're on a daily time frame, we're not looking at it in the same relevance, right? Come down to the 15-minute, and you start to notice, if we rewind this, so I'll show you. Look at all of our entries, right? Entry in line with that area. We want to sell because it sweeps a high. Our area comes up, right? So it's giving you the points that you should be looking to get involved within the market if it delivers the appropriate thing, whether it's sweeping, interaction with order block, whatever it may be. So notice how it's delivering it here. It's delivering it here, but they don't hold the relevance for us. And this is what I said in the Keep It Simple series: is it's all right applying a system to a chart, but you need to have relevance for that. So when we sweep, then we create that space. That's where our entries are. So notice how the entries are in the exact place where these are. Yeah, the same thing over here. When I play this forwards, and we have the data trailing as well, so it only highlights X amount at a time. You'll see that it's deleting them as we move forwards. And then what do? We have that area, right? Same thing, delivered. Right, and then this is what I was saying yesterday, that excuse me, sweep and cheap. Yeah, that's it. So the same principle is being delivered across every single point. The only thing is we need to adjust the parameters within the indicator, so it shows every point that we see on the 4 hour within the 15-minute. But at the moment, we're just using them as 3 separate things and then applying the principles around, right? It's more of a case of get the groundwork in place. Once it's in place, we can combine them and create the all-in-one. It'll just be, keep it simple. You literally click it on and it will do everything. You won't need to have multiple indicators. So really useful. Really, really useful. And I will be making this indicator available to Discord members once I have finalized it and I'm happy that it all works the way it should. Oh, also, guys, pretty big news. Pretty big news. We have 3K now. 3K subs on YouTube. Would you believe it? 3K subs. That's wild. Where are we? Here. Look at this. 3K. thank you to everyone that helped me get there. I appreciate that. And we said, didn't we? The goal was for us to reach 500 TradingView followers before the end of the year, and 3,000 subs before the end of the year. And we've done both. So let me just pull that up. So a massive thank you to everyone that has been following along. 507 followers and 3K subscribers. So we've met both of our goals before the end of this year. Actually, way before the end of the year. Way before the end of the year. So I really appreciate every single one of you that's helped me get there. Really appreciate it. All good, Andre? Cheers, Martin. Appreciate it. So, again, very, very visible, usable sort of system. It's really useful. We just need to work out a couple of ways to apply multi-time frame logic to it, so then it's going to work across every single time frame, and it's going to do what it should do, but contained within one package. I'm long on Euro, GU, but don't like what I'm seeing. Yeah, I mean, I was calling... Well, I called this for the Discord members. So I can literally just get rid of that. I don't need that. And I'm going to change this back so it's not visible on the hourly. Alright, so remember we were calling these highs being run? I clearly don't have an alert set for this, do I? Yeah. So call the alert name. So this is like some of the tweaks that need to be made, like the default alert name and the function. So for example, we want it to be set so you can choose between highs and lows, which is being alerted, right? So like quality of life changes. I'll be on later if you want to jump on. Yeah, sure, Andre, no problem at all, mate. We can do that. And then once we are at a point where I'm sort of happy they're working properly, we're gonna set a event in the Discord for the VIPs, and we're gonna walk you through how to apply them to your chart and so on. Yeah, and then we're just going to showcase how they work, how you can set them up so they work for you. We'll see. But to be honest, I think when it becomes an all-in-one, it's probably going to be a VIP exclusive, to be honest. VIP exclusive once it becomes an all-in-one, but it's not an all-in-one yet, so don't anyone worry too much. So we were calling for these to be swept out, right? As well as this high. And you can see that if you're a VIP, you would have seen that in the VIP channel, which is right here. Okay, for some reason I can't. Okay, I can't copy the image for some reason. Oh, it's because of this. Yeah. Yeah, we're calling for sweep. Yeah. So we know we had that sweep. Price action sweep the higher. Come down to the 15-minute. And we called out this area as well this morning. Notice how that point was taken out. I'm going to reduce the amount of input shown. Oh, maybe I don't have that setting applied. No. Okay, well that's another thing that needs to be adjusted. We were looking towards here. So once we've got this nailed down to where we're happy with it, so like every aspect, we're actually going to devise it, excuse me, to be a automatic trading system on TradingView. And this is separate to our bot. The bot is going to be a meta trading bot that will just trade over time. This will be a trading strategy that is testable on the strategy chester here. So this is the area we were watching this morning. Price didn't tap in, unfortunately. Your trade would look like this. So it's a 1 to 6.8. We'll go back to here. Notice how our bias on this, bearish. Yeah, bearish is the bias. This is another thing as well. You can use this indicator to just have a bias on price. You don't have to have that higher time frame bias indicator that we're working on. You don't have to have that. The only thing that what this is going to do is it's going to just say bullish or bearish in the top corner, so you know what you're looking at immediately. Whereas with this is why we use the indicator we use. Well, not the indicator. This is why we have the bias we have. Each time one of these is formed, it represents our bias. So we were buying here, we were selling here, we were looking to buy here, we were still looking to buy, then we looked to sell for one day, then we looked to buy, then we were selling here, and we were buying here. So you notice how it tends to be on the right side of the market, and when you have a prolonged period, it will just consistently deliver that bias. And then when it delivers a counter, it consistently delivers that bias. It's the same here. This is a daily chart, by the way. So same thing here. We're bearish right now. Yeah, price was bearish. We're still bearish. Come down to the 4-hour time frame. Look at these highs in here. Pull a line out on these. This is unfortunately one of the issues we have currently. Come down to the 15-minute. One space given at 9:45 at night. Are you going to take that as we come into market close? No, you're not. So is there any relevance within this? Not really, no. And again, you can use the same thing. This is what I was saying to you before. You can use the 15-minute points as your bias indicators, and then trade the lower time frame, like the 1 minute. And this will work down on the 1 minute as well. See that? There, we didn't have an interaction. But the way that it gives you that, and then it runs bearish. Gives you that, runs bearish. Gives you this, runs bearish. Gives you that, runs bearish. Gives you that, runs bearish. Even ran bearish here. Now, what you need to remember is it's not always a case of it's not just going to deliver these little points and you'll go, oh, great, I'll trade this. This isn't going to be delivered until this candle forms. So you're not actually going to get that bias until you're here. But what it tells you is, okay, if we interact with this area again, there's a potential that we may be able to sell from this point. And the same thing applies across the board. Taps into here, taps into here, taps into here. So you have 3 points on the 1 minute that you could have used if your high time frame bias permitted. It's always based off of that as well. But this is what I was explaining in the Keep It Simple series and in the concept itself, that the principle is going to work on any time frame you apply it to. It's about understanding what you're doing and how it works. We'll jump on a call later for sure. I tried trading GJ order flow in Asia. They are wild, even wilder than NQ. Oh yeah, yeah, I know, right? It shows candle flip structure. Yeah, so it shows, well, it doesn't actually reference structure. Structure is a byproduct of the money in, money out principle. So structure and the money in, money out don't actually, well, they do relate technically, but they don't necessarily have the same principles. So structure can move in its own way and deliver, let's say something like this, where it would give you a chocky, flippy, whatever you want to call it, and go to the upside, right? But there may not be a money in, money out. And then you may have something on the other side where structure will put in a high, put in a low, but you'll have a money in, money out, and it will give you a move that you can trade out of there. So they don't actually have the same parameters around them. So structure is a byproduct of the money in, money out, because the money comes in and creates a given movement. Doesn't always create structure as well. But yeah, I 100% agree with you though. Not try to disagree with you. 100% agree with you. Yes, I believe there's a lot of potential for that. For sure. And this is why once we get it down to it being defined as a rule set that can be followed. Not a rule set, sorry, but as a system that can just be followed with one indicator, it's going to be like buttery smooth for you guys to be able to pick up on the entries and see where the entries are. Like, it's going to be so smooth. Because the idea as well is, let's say we come up into here, it triggers the 4-hour entry criteria, and then 15, 20 minutes later, it triggers the money in, money out. You'll get an alert on your screen and it will say entry. Entry with an M. It will say entry equals 0.197, for example. Stop loss. And then it'll give you a stop loss and it will say TP. So you'll have everything right there. So all you will need to do is respond to an alert on your screen. You don't need to actually sit and analyze. And that's the beauty of it. We're putting in the groundwork for this. We're moving away from the traditional man at the desk trading into what it should be, which is hands-free, completely independent, pre-data driven narrative rule set that is applied at lightning speed with complete robotic consistency, allowing the human side of things to remain human. Instead of adjusting our nature to become that trading bot, just trade what the bot tells you to trade. That's what we're looking at. That's what we want to do. And that's what it's going to be put in place, right? Now that we have the bias indicator, the money in, money out, and the entry, we're now going to start to implement daily liquid. Yeah. Daily liquid. But like I say, at the moment, having a bit of problem, that's not English. We're having some problems integrating and crossing over timeframes. So it doesn't seem to want to link higher time frame data to lower time frame data. Which is what we're doing because we're referencing from the daily down. Cheers, Akram. Appreciate it, man. Appreciate it. I've been working pretty hard with this. I've been working with it pretty hard. That's why I've not been, hosting any Discord streams. I've not been massively active in the Discord because I've literally just been flat out on every spare bit of time I have. I've just been doing the indicators. Literally doing the indicators. Okay, so do we have one here? Yeah, so we have one Euro NZD, right? So when this high is crossed, we'll get an alert. Then we can just go 15-minute. And then in theory, we should be able to go here. Yeah. Now, what I was looking at was maybe having a way to integrate the alerts. So when one alert goes off, it triggers another alert to set, but you can't do that. There's no way to cross because it's all done on the back end. Excuse me, it's done on the back end rather than the front end. So these will be my first scripts published. I haven't published any other scripts. The other scripts that we have to the Pip Surfing Society name is Gemini. And Gemini was written by my co-owner, so he was the one that published it. I'm not sure why, but for some reason, I believe it was the house rules or something was breached in some part of that indicator, so they actually took it down. So it's only private now. If you've got a link to it, you can follow it. But yeah, I don't know why that is. It's strange. So we're just waiting for an interaction here. So remember, these lines, the line highs are liquid, and we can change the coloration of these. So we can tone this down a little bit as well. Let's do it to like 6. And we'll make the highs golden. And then the lows green. Because we're targeting the lows. So I can literally just go invisible, and now you've got a nice clean chart. Pretty simple. If we're lucky enough to see it pull back right up into these highs, then we can sell from the high down to the low. If we don't, then we'll just look for the most relevant point of institutional liquidity, which we can follow down into those lows. So remember, you will not find these indicators on the indicator suite because they are not public. We're just going to wait for this to come up to one of our highs. So if anyone has any kind of experience with being able to code across different time frames, then please let me know. I've looked on the internet and I can't seem to find a solution for it. Obviously, if you guys want to help out and try and find the solution for that, that'd be awesome. But I've looked and I can't find a solution. I found multiple different things, but the coding just never seems to sync together. $3K subs, guys. What a great job you've all done. What a great job you have all done. So we're bullish on this. We've just taken a low. Let's see what we've got here on your... Oh, look. See, look. This is what I was saying. It gave the space. So your stop would be down here. Entry here. So we're pretty much at entry. I believe what we're bullish on this, right? Yeah. This is another thing that we need to fix as well. See how we're on the daily time frame, but we've got these random points of floating liquid. Don't really know what they're referencing because they're not referencing the daily. You can see that they're sort of just floating in random points in space. So in this case, we're looking at price coming up to the highs rather than coming down to the lows. So it looks pretty good for you, Akram. Looking like it wants to continue going up a little bit. Into like the 5 minute. That looks alright. That looks alright, dude. Same with Euro. Like, Euro looks alright. So remember, guys, this system that we're using is the simplest system ever. It is the simplest. You can apply it to whatever time frame you want to apply it to. Whatever chart you want to apply it to. So let's just have a look at what alerts we've got. We've got Euro, NCD, Euro, GJ, U-Chef. So let's head over to gold. So this is another example here. We took the high. Let's go down to the 15 minute. Okay, so there was an entry but no contact there and it was 3 AM. So low volume. This is what we need. Need that to be visible in the daily time frame. Go back to the where was that? U-Chef. Oh, that was the trade that we were talking to you guys about yesterday. UJ. I'm pretty sure I showcased it to you on the live stream, did I not? Yeah, I think I did. I think I did. So it did reach the second target. You give it up to the high. Should actually be a little bit lower. Like that. Again, notice how it gave you the area. Working the whole time. Bullish off of the basis that we are running from this bullish move down here. All the way up. Daily high, daily high. Took out the liquid low. Clean. Just setting a low on this as well. Do we have an alert for this? This was the cleanest setup, to be honest. This was the cleanest setup ever. Swept that high. Immediately we got that entry point down. Okay, so from that euro short, we still have a high here that may get hit. I mean, I'm not sure if we have an alert set on this. We'll see it change anyway. We'll know when it gets hit. Still holds the same relevance. Remember, this will change. It will lose its status of liquid and it will turn into a non-liquid high. Let's go over to NAS 100 here. So we were talking about the trade yesterday here. And look at the targets we had for it. The 2 targets we had, both got hit. Perfect. Literally perfect. And again, we called this out in the Discord. I'll showcase it to you guys again, just so I'm not talking a load of toffee. And you can see that's a active market. You can see the counter there. That's what we called it out. Beautiful, right? So this is what I was saying before. Having targets that are miles away is all good and well, but you need to have relative targets to the trade setup that you're actually following. So for example, you're trading this off the 15-minute. The major lows that are placed on the 4-hour should be the point that you reference. Excuse me. Then we've come back up. We've taken out the highs right here. That was one of the highs. Here there was a reaction at 7 p.m. Minor move down. Price didn't actually follow that down, actually went up. So if you took that trade, you would be taking a loss on that if you held that. But let's be honest, who's taking a trade at 9:30 at night? Not me. So again, same principle. We're looking. We've just ran a high now, actually. So your entry would be there, pretty much where we are. Now where are the 4 hours? So the 4-hour lows are actually way down. So you'd have to be realistic of where you're actually going to take that trade from. Or to, sorry, not from. Remember, not every trade's a winner. Not every time it happens, it's going to work. So be realistic with it. Remember, I showed you the backtesting data for this for, I believe it was 4 to 5 months. So we tested the 15-minute chart on GU, and it had, I believe, a 50 to 60% hit rate. So expect half the trades you entered not to work. And people go, oh, you can't say that. Oh, that's gambling. Like, no, that's not how it works. It's about statistics. It's about understanding that you cannot ever run from numerical precision. At the end of the day, numbers are always going to tell the truth, which means no matter how you feel about it, they're going to tell you exactly what you're seeing and what is happening. So, to give you an example, right? I post reels on TikTok and YouTube. Any reels that I talk about having a lower hit rate, so I say that you're getting like a 50% hit rate, it gets like, honestly, and this is not even a bullshit, like 60% of people dislike it. It gets more dislikes than likes as a reel, which to me just shows how many people are not ready to be traders. Just simple as that. They're just not ready to be traders because they're too busy worrying about how high of a hit rate they have and making that define who they are as a person, as a trader. It's not the case. It's not about how high your hit rate is. It's about how consistently you can apply a rule set. And yes, it does come into play when you have a higher hit rate you can have a lower risk reward. Yes, that is true. But you can't ever expect something to be 100%. That's just not how it works. And honestly, the amount of dislikes they get when I talk about realistic stuff, it's wild. It's wild. And like, it doesn't bother me because it's a case of like the only people that are disliking those kind of reels and short content is the people that just can't hack it. You know, they can't hack it. They never will hack it. Simple as that. So I'll show you guys an example of this. So I'll take you to my YouTube videos. I'll go to short content and we'll scroll down. And it's easy to find them because... So this is the first one, right? It only has 6 likes. But it has 7 dislikes. So that in itself, yeah, right? And the title of this short is Rules Give You Consistency. 42% of people like this. And the title is Rules Give You Consistency. Does that not tell you everything you need to know about the trading industry? Because I think it does. It honestly is mind-boggling. Absolutely mind-boggling. It really is. Let me find another one. Like I say, they're easy to find because they have really, really low like rates. There's also somebody that goes out of their way to dislike my content because all of a sudden, all of the videos that were 100% liked, they all have 1 dislike on them. So someone's going out of their way to dislike them, one person. So that's all good. The way I look at it is if you're clicking on my content, you're helping me out at the end of the day. So whether you like it or not, you're helping me out. This is the main thing. Okay, this is another one here, right? This one has... So obviously we're talking really low metrics, but I'd imagine the metrics would increase in the same way as they are through a smaller audience, that they would translate into a bigger audience. So this is one of the older reels. This has only got 4 likes, right? Sorry, not 4 likes. 2 dislikes, 2 likes, right? And do you know what the name the name of the title of that reel is? Uptrends have lows as well. People don't want to talk about it. They don't want to talk about it, so don't even bring it up. It makes me laugh. It does. It makes me laugh. Yeah, so don't talk about uptrends having downs or lows on them because that is just implausible. Don't you dare. So yeah, that did make me laugh, I must say. The people getting all defensive, like, don't talk about trading like that. We only win. We only do wins. To have 80... You have over 80. No one lied to you. Will find yourself crunching numbers all day, making stats to build descriptions and preferences. Oh, to have over 80. Oh, yeah, dude. This is the thing as well, right? People always love to talk. People love to talk. People love to talk. People love to say, oh, you can do this or you can do that. That's fine, but you've got to be realistic. And you've got to remember that most people, not all people, most people are pretty selfish. So most people will establish an idea and a principle off of what they are capable of doing. So what I'm saying is, it's not about what they're capable of doing in terms of skill, in terms of time. So let's say someone says you can have a 90% hit rate. That's fine. But it probably means you're going to have to sit on the charts for X amount of time to get to that point. And again, this doesn't mean the longer you sit on the chart, the more of a hit rate you're going to get. That's not the case. But what it does mean is it means that you're going to have to give up more to, in return, get something else back. Whereas what we should be doing is working towards a happy medium of percentage of hit as well as return on your risk, instead of constantly doing what the economy does, and that strive for greater numbers, greater percentages, better, more, constantly more. That's what kills most traders, because they always want more. They always want more profits. They always want more trades. They always want more. Instead of just finding a happy median and then just sustaining that, consistency with a sustainable level of return is better than trying to consistently gain more. The economy is in an absolute shit state because that's the way that humans handle the economy itself. So if you handle your trading in the same way, you're going to find yourself in a pretty similar position, right? So I think the main thing is 90% of people are doing the wrong thing. They're moving away from what we should be moving to. They're going into more trades, more growth, more money. Whereas find a realistic percentage and sustain it. So we have right now Euro, which is sitting, honestly, it's a bit of a wacky area right now, but it's sitting in the middle of this sort of area of consolidation, meaning that it's more likely going to reach for one side of liquid. Now, it's consistently drained the liquid from the highs, so I believe we're going to seek a low. My target is here. My bias is sell. Whether we get that directional movement or not is a different story, but that's me sticking to my guns. Again, follow the daily principle. We've been bearish from here. Yeah, just like we were bullish from here, then we were bearish from there. Bullish from here, bearish from there. And again, this movement here, we publicly announced that we were going bullish on Euro over our trading view. And then the next day, we publicly announced that we were wrong. So don't be afraid to be wrong, and follow your biasing, because it's completely normal for you to not be correct 100% of the time. And you'll notice a lot of the people that aren't correct, they don't like it. Whereas you should take it as a case of, okay, well, that's part of the statistic. It's paying the trading fee, if you were. You have to pay the fees to be able to play the game. As simple as that, right? That's why a lot of these trading a lot of these trading influencers don't use TradingView, because TradingView is one of the only platforms that does not allow you to edit and adjust your posts once you post them. You have 15 minutes to make posts, and then after that you're not allowed to adjust them. So many of these people that claim to get all of the moves right and they know best and you don't see them posting on TradingView because they don't like to be wrong. And that's again why I really appreciate everyone that follows me on TradingView, because you're following me based off of the principle that I'm posting every single week. Whether I'm right or wrong, the work is there, the description there, the reasoning is there. It's a realistic, real world version of what trading is. It's not about being 100% accurate. It's about providing, for example, when this decides to load, potential, backing your idea with logic, and then letting it play out. Yeah, and you can see exactly here, we broke down below that area that I was talking about, the trajectory area. We failed to react here and we continued to sell, which was one of the points of description that I explain in this text. So don't be fooled by people that tell you, you're going to be right every single time. No, don't be fooled by that, because that's horseshit. Honestly, the fact that we didn't take this high is kind of wild. We're still sitting on there. Remember, we've got alerts for all of these highs. The indicator itself gives you alerts when these highs are taken out. So if we hit the points, we can then reference for selling or buying from there. But at the moment, we don't have any alerts going off. Also, referencing back to a question asked yesterday, and this is what I also like to do, you guys know this, I'm the first one to tell you if I'm wrong, I'm the first one to tell you if I was right. And we are going to go over to the DXY. Now, I spoke about the DXY yesterday, and I explained that I would be looking for price to continue traveling higher. Now, we have had a bullish move since. And what I believe is going to happen is I believe that we're going to establish another high here, which is going to accumulate even more liquidity in this upper area, which is then going to encourage price to continue going up into those highs. Now, why do we have this bias? Why do we have this idea? Well, when we go onto the daily time frame, what is the last directional move that we have in place? Is this going to work? Yes, it is. The last directional move we have in place is a bullish move. So therefore, our directional bias maintains bullish. Simple as that. No need to change, no need to speculate, no need to have any other ideas other than what we are seeing. So if you have a bias against that, that's completely fine. I'm not telling you to have my mindset only. But the realistic attitude you should have, it's kind of like Bitcoin, right? The amount of people that were saying short Bitcoin, it's short it. That shit's going up, dude. If you're going to do anything, you should be going long. The same thing with this and XRP and Doge. Exactly the same thing. Now, this is what I want you to notice. When we're traveling up, a lot of the time, there's going to be a lot more crosses on the screen. Sorry, not crosses. There's going to be a lot more dotted lines on the highs than there is on the lows, because price is traveling up and it's taking the liquidity off the highs. The only time you won't have a lot of dotted highs is when you're waiting for that move to come. So for example, we'll go to Euro. We're waiting for a downside move here. Look at how we've got a lot of crosses on the high. That's the wrong chart. Let me get the right chart. Here. Little crosses on the highs. Delete that. But we have a cluster at the low. So we know that the liquidity is clearly sitting at the bottom where we want price to go, telling us that if we get an entry, the probability of that expansion becomes even higher. By the way, Bitcoin target for me is 96.5 before I start looking to short. I honestly am not going to look to short that until I see a valid reason. And the same with you. You're not looking to short it until you see a valid reason, which is correct. That's the right way to manage it, and the right way to look at it. So that's perfect. Yeah, that's what we should be doing. We shouldn't be over anticipating it going down when it's clearly traveling up, right? So we're just going to find EUR. There's no way that is still not taking that high. No confirmation, no entry. Exactly. Yeah, and it's always the same thing, right? It's always the same. Don't let price action fool you by moving around the way it does. So like this. If that just goes up through the high, you take a loss. Oh well. You take a loss. Simple as that. Simple as that. Alright, so we're just flicking through. We're just looking for... Remember, we have alerts set on these. I've got to change these back. I can't deal with the... I cannot deal with those whack-ass colours. Oh, I will also actually... I always do it. Forget to change it for you guys and your soft little eyes. There you go. So just let it roll. Let pricing do what it wants to do. Right now we only have to sit and wait for an area to be met. This is what we were talking about yesterday. US dollar, Japanese yen running up through the highs. Again, same principle. Daily time frame, bullish. Swept the low, entry given. Again, we called this in yesterday's live stream, so go back and watch yesterday's live stream if you haven't already, and you'll see the exact point we called this out and what we were saying about that. Price action running up to the high. This is where we'd expect it to travel to. Short-term targets in place because sometimes we don't reach those high points. Now remember, this whole system that I'm showing you and explaining to you and that is shown in these indicators is learnable in the 5-part series that we have released, which is the Keep It Simple series. I'm just going to grab a coffee. Don't say that. I entered earlier. What did you enter on? What did you enter on? Got to head out? Of course, no problems, my dude. What did you enter on? I've only just seen the chat. Oh. UJ, right. Swing trade. Yeah. I have it as going long, but that's just my opinion. That's not, it's not the be all and end all. It may be continuing a higher time frame move to the downside. I have daily indication of upside. I then have 4-hour lows being swept 15-minute money in, money out. Then higher time frame points of liquidity across these highs. And then higher time frame targets. But again, that's just the way I'm, stick to what you do. That's the main thing. And that's what I've always said to you, and you agree as well. Follow your proven rule set that you have. That's the best thing to do. So right here, there is potential for a small sell-off. I won't be selling it, as this is a counter move. But the entry itself would be something along the lines of this. If this gap remains, that space shouldn't even be there right now. That's something that needs to be adjusted with the indicator. But again, I'm not actually looking to sell that off here. We'll see. Right, I'm going to go grab a coffee and I'll be right back, guys. I'm back. Gonna get some music playing. Let's go down to here. Where is that one that I want to listen to? Here it is. No, it's not it. Here it is. Cool. So let's double check. This is bullish still. Yep. 15-minute. Long from there. Pretty much where we're at. Now, points to keep in mind is that we were bearish on this and we've gone bullish after sweeping out the lows. So there is potential this could open up a new bearish move, but at the same time, it doesn't matter how we feel. We follow the principle that's being delivered to us. Okay, so that's Euro GBP. And as I said before, it's not about how you think price is going to move. It's not about what you feel like price is going to do. What does your rule set tell you? What does the Keep It Simple series teach you? Apply it. That's the way to stay on the right side of probability. Discretion does not provide consistent probability. Discretion provides emotional reactions to something that is a non-emotional environment. Applying emotions to a non-emotional environment gives you inconsistency. Just as simple as that. There's no way to beat around the bush there. You cannot run from the numbers. I always look at the trading in a different aspect. So, for example, if you learn how to drive, okay, and then based off of how you feel on a given day, you choose to drive in a slightly different way, you're going to have an accident. Simple as that. Why is it any different with trading? Except instead of risking crashing your car, you're risking money. No different. So remember, guys, if you are enjoying this stream in any way, shape or form, hit that like button. And of course, if you're not already a subscriber, hit that subscribe button. The Discord link is down below if you want to join the Discord. Welcome to everyone that has joined the Discord so far. Remember, if you are watching, all of the rule sets you need to follow are taught in the Keep It Simple series. You can find the playlist on the Pip Surfing Society homepage, if you were. And it's going to give you a non-emotional way to react to a non-emotional environment, which is going to provide you with consistent, long-term probability. Yes, it may not be the most interesting way to trade. Yes, it may not be the most exciting way to trade, but it's sure going to be the easiest and long-term, the most likely to actually bring you out on top. Again, the market does not care about how you feel. The only person that cares about how you feel is you. And maybe your partner and your mum and dad. But essentially, it doesn't matter. It's irrelevant. Your actions are only going to result in a consistency fluctuation, essentially. It's going to cause fluctuation in that consistency. You need to provide yourself with a statistical movement that is like this. So the deviations are minor. Whereas when you trade with emotions, so let's just move 1 second. Let's just move this out, right? When you trade with how you feel in a non-emotional environment, so the market is the non-emotional environment and you are the emotional person, your results are going to be like this. right? And they're going to exaggerate, and they're going to exaggerate until the point where they flatline, where you give up and you walk away. None of that is ever going to provide you long-term stability. When you apply a rule set to a non-emotional environment, you're going to have something along the lines of this, right? Which you may not have the amazing yay and oh and yay and all and that immediate short-term gratification that all of, unfortunately, the new generation are looking for, but it is going to be able to provide you with a consistent longer-term result. Then, when you take you out of the equation altogether and you apply it to an indicator or a bot, you have something like that, which is going to fit in that box perfectly. Now, again, this is based off of the fact that humans are the problem why so many people lose in trading, because you apply how you feel. So right now, we look at this, and I'll give my honest opinion on how I feel about this. I reckon this is coming down to the low. That's my honest opinion. So people say, well, why didn't you get out of this then? Okay, well, if it doesn't and it goes up to the high, then we just fucked up our statistics. And if it does come down through the low and we took the trade out, we're also fiddling with our statistics, which again, over a long period of time, is going to reflect badly on both sides of the market, because you don't know the outcome of any individual trade. So because you don't know the outcome of any individual trade, you don't know which side of the statistic you're going to be affecting. Right? So regardless of the outcome, whether this is a good trade or a bad trade, you take it. And the reason why you take it is because your rule set tells you. And if you're unable to follow a rule set, you're not going to be able to be a trader. Simple as that. Simple as that. There's no, whether people like that or not. Again, I spoke about this earlier. Every single reel, every single short that I have posted where I talk about statistics and I talk about rules and I talk about not having a 100% hit rate, gets more dislikes than likes, because people don't like the reality of what trading is. If you don't like it, don't do it. Simple as that. I mean, you can do it. You can do what you want, but I can promise you where you're going to end up. In the losing statistic bin with the rest of the people you see that tell you Forex is a scam. Simple as that. Again, to prove to you guys that this is something you can take to a next level, I work with a hedge fund in the city of Kuwait in the Middle East. That is owned by one of my first students. Coincidence? You tell me. And again, if you want to follow me on LinkedIn, TradingView, Instagram, all of that good shit, you can find all of the stuff you need to find down below, or just search me, Ross Hayes, on LinkedIn. You'll find me. Remember, if you have any questions, you can ask any questions. I'm happy to answer any questions. This is an educational stream based around consistently applying a concept. It's not based around how much money you're going to make over the space of a day. It's about understanding that having a statistical edge in the market and a data-driven edge is going to be much better than having a screenshot of a MetaTrader demo account telling you you're going to make 10k in a half hour. And this again is why I strongly believe that we're not up in the triple figures on our stream, because people don't like the no sugarcoating bullshit. They don't want that. They want the sugar-coated bullshit. They want me to go, guys, you can do it if you just focus. If you just focus and just work hard, you can do it. Yeah, okay, that is true. But you got to follow rules. If you don't follow the rules, you're up shit's creek, my dude. And as I've said before, this YouTube channel is owned by myself. So all things said and shown here are my personal opinion and for educational purposes only. If you choose to expand your knowledge and apply this in a real world scenario, make sure you have proven it through a statistical data backtesting scenario so you have confidence in the things that you are doing. Okay, right now, nothing. I believe this is heading up towards the high. So, well, it's still hanging around the same area at the moment. Again, we're bearish on this. Our trade from yesterday came down, hit both the targets. Sweet. If this comes and takes out the high, it takes out the high. Simple as that. Gold, we're still looking at this running back towards the highs. Now, we did have this area for a sell move down, but because we've come down and we've hit our short-term target here, this is no longer valid. We should have had a tap in up here. So it should have done this. But it didn't give it to us. So we move on and we wait for the next one. Simple as that. So always be aware of red folder news. High impact news is of course going to change some of the market dynamics, and definitely it's going to change some dynamics with your broker. So keep that in mind. I'd indicator legends. Well, we're not moving anywhere just yet. As if that's sitting like right there making a double top, and it's just like, okay. Well, not a double top. I don't know, call it a double top. It's making 2 points in the market that are relatively equal, so equal highs if you want to call them anything. Still just sitting around in that area. So we do have this, which is like an all-in-one version of what we already have. So if I turn this off and turn this off, you'll notice that this still remains. And then go to the 4 hour, and we still have the highs and lows, which I will kindly remove the labels from. There's a reason most people dislike your shorts, because they are the statistic. Yeah, I mean, yeah, sounds kind of harsh to be fair now you say it. But yeah, that's true. I suppose that is true. So you're more likely to incur somebody that is going to disagree with what you're saying than you are somebody that is. Which, yeah, I believe that's why we don't do crazy viewer numbers as well, to be honest. I think we would have a lot more viewers if we... Yeah. But at the end of the day, we keep doing what we're doing. We teach the right way. We show you the real stuff. And if people choose to follow it or not, it's up to them. That's up to them, isn't it, at the end of the day? Eros, thank you for the breakdown last time on Givo. Saved me some money to get out on time. Good shit, man. That's the main thing. That is the main thing right there, my dude. That is the main thing. If I can help you out in any kind of way. This time I'm back on. Okay, let's go and have a look. Shall we? We've got them saved here. Let's go. I see you. Looks alright. Look at this. That bullish bias given, and price absolutely takes off. I think it'll go for new high. I think you're right. But, and there's always a but, what I think is irrelevant in terms of actually trading it. What I'm seeing here is that we're going to come down and take the low. That's what I'm seeing. But I believe it probably will go to a new high. I'm seeing it statistically. I'm following a rule set. So statistically, my biasing and understanding of the rule set I use, it's telling me we will come down. But in my personal opinion, I think it's an alright pair to be going long on right now because of where it sits. It's taken out 4 different points of liquidity and it's changed its direction to bullish. So there is definitely potential for it to come back up into those highs. One of their board of directors is the new Minister of Energy for US Trump. Yeah. Getting all of those goodies in there, right? Let's see what we got here. I can't actually remember. Were you shorting this? I think you were. I can't remember. I honestly can't remember. So I don't know if you guys pre-marked 4%, pre-market 4%. Oh right, yeah. Long. Oh, we were long before. Oh, it's a bit shitty, isn't it? Um, yeah. So I said to you guys about airdrops, and I said that I'm holding XRP, which has gone up to all new time highs. We're above $1 on XRP now. And when you hold over a certain amount of XRP, there's certain tokens you get airdropped, and what happens is they will give you these tokens for free. And depending on the equivalent of the XRP you hold, depends on how much you get of whatever token they're giving out, right? So I got given Quorum. And look where it was. Look at where it was. It was down here. And that shit blasted. Absolutely blasted. Now it's retraced, I believe, over 50% of the move that it made. But I got this token for free. So I really do not care where it goes. Even if it comes down below zero, I don't care because I'm never gonna be out of pocket holding it. And I also got Solargenic. Yeah. Solargenic, which also took off from that same area. This retraced, but it has actually made some more space, so definitely potential for it to expand up because we're going from 0.05 up to 0.3, so pretty substantial movements on that. It was nice. Again, I'm just long-term holding. Bitcoin just put in a new all-time high again. This is what I was saying earlier. Don't let the Instagram divvies tell you to go short on this pair. Do not let them tell you to do that because that is a stupid thing to do. It is a stupid thing to do. Don't do it. Still sitting at the entry point here on NAS 100. Again, still sitting around the entry point here on Euro. And like I said before, it's not about what we think is going to happen. It's about following a rule set. What we think is literally irrelevant. It is irrelevant. Euro A, we're still looking for that to run up to the high. Looks like it's going to do it now. Remember, we have alerts set, so if there's anything worth looking at, we will know. We will know. The only thing we've seen is NAS 100 sell from the high, and then we're looking to bring it all the way down to this low. Euro GBP, we're looking to take that up to the high, but like I said, I honestly don't believe this is going to work. But some of the worst trade ideas well, not worst trade ideas, this is another thing, that no trade idea is good or bad unless you're trying to short something that's clearly going up. Here, we may be like, oh, this is going down. We think it's going to get down to here. If your system is telling you that you should long it, then you should long it, right? So even the most unlikable is the right word to use. The most unlikable trade setups sometimes end up delivering the best results. It's not about whether you like it or not. It's not about that. Like I say, hedge funds and all of these huge asset management firms don't take positions based off of how they feel. They take positions off of statistics and understanding and principle, not off of what they think is going to happen. XRP was flying last week. Yeah, I know, dude. I made like 40, I think 40, 50% of my portfolio in the space of a week. Pretty good. Pretty good. Ugh. Yeah, I know, right? Dude, it was the same on it was the same on the Quorum and what's the other one called? Solargenic coins. Those coins that I showed you. Let me get those up 1 second. It was cooking. Yeah, I know, right? Yeah, it was cooking so hard. Here, so Solargenic. If we go back to the daily chart, like if you look at, well, if I just measure from the point it started taking off, down here, look at that, 390%. 390%. So I was like, very nice. Yeah, same from here up to the high, 200%. So, we're talking pretty big gains over the space of a very short period of time. So I think a lot of people got in and out for that short-term win. Whether they'll be able to, actually maintain that again, I don't know. This is another thing we need to fix. That you see how this is displaying a bullish gap on the daily? We're not bullish yet because this daily candle hasn't formed. This daily candle hasn't formed, so we're not bullish yet because this gap could easily close. If price does sell how we think it is, that gap will close. So we need to adjust that. Actually, I believe I may... No, it's still incorrect on that, so that needs adjusting. Definitely needs adjusting. But yeah, it is what it is. So Euro GBP still just floated around that area. God, we got some messing around going on today. Some messing. Remember what we're looking for again? We're looking for a run up to then break down. Yeah? We're pretty much looking for this. Yeah? Same thing to happen again. That's what we're looking for. Remember, guys, if you haven't already, hit that like button. Appreciate it. We've got 7 likes right now. I reckon we could do better than that. Matter of fact, I know we can do better than that. I don't even doubt you guys. I know we can do better than that. Oh my gosh. The Euro G still fucking around. But that's all good. Like I said before, it is literally irrelevant what kind of price action movement we get in here. It does not matter. The principle is we're looking to go long to the high. Simple as that. That's 100 with a nice move to the downside. How often do you need to travel to the Middle East now? Generally a couple times a year. So it's nothing crazy because the idea is that I am the British sort of how to say, I'm the connection to England to the Middle East. So my job is mainly focused at being in the UK. And once they open an office over here, which they're expecting to do relatively soon, I'll be in the office. Yes, I will. I will be very busy. And this is why you guys have probably noticed it. I've made such a major push to automate as much as I can. That's why the bot is being built. That's why the indicators are being built. Everything's beginning to go towards the automation side because I know coming up in the future, I'm not going to be able to do these live streams and teach you guys. I'm not going to be able to produce videos every week for you guys to watch. So these live streams are going to become invaluable. They really will. So I'm looking for this low to be ran and this low to be ran. Cheers, mine. Appreciate it, man. Well, it's one of those things where, like I say, I strive myself. I strive myself. That doesn't make any sense. I strive to deliver content that would have helped me when I was in a position that a lot of people are in. And I've done that consistently for the past 2 to 3 years. There's no one can deny that. You can look back. There is hours and hours and hours. I hate to think how many hours, to be honest. There's probably thousands of hours of free content that I've explained multiple different concepts that I have taught, that I've created, traded myself. I've shown you live executions. I've shown you every aspect of it. Risk management, the lot. It's all there. But a time is going to come when I'm going to have a bigger position to fill. And that position is now being presented to me in the form of the investment firm from Kuwait. So there is always going to be a time where the content I provide and the value I provide is not going to be able to, I'm not going to be able to just give it out freely. My time becomes more valuable. That's why, like I say, the automation and everything is top priority list right now, because all of the systems I've taught and I have been teaching are all there for you to just use readily as you would like, rather than me having to be here actively to teach you how to do that. So the main thing is that you, and the position of being a full-time father, that as well. Yep, 100% that as well. That is a position in itself. Literally, that is a position in itself. So I know that most of you really appreciate the live streams and the content and all this kind of stuff, but there's a lot of people that just really don't take it for what it is. And it's only once it's not being supplied that people will be like, oh, wish I'd have been involved more. At the end of the day, I give as much free value as I can, and people either take the use of that or they don't. Difficult? Yeah, it's difficult, man. Of course. So did anyone follow this Naz idea? Euro again coming down into these lows. If it takes us out, it takes us out. Simple as that. That's down. Get down. That's what we tell it. I just need to take a screenshot of this one. There we had the higher ran. We come down onto the lower time frame. For us, it's the 15-minute. And we apply the money in, money out indicator to find the area where the relevance is true. And the relevance is right here. giving us this the entry, and this is our protected point of structure. Meaning probability tells us an expansive move to the downside is likely. Sometimes you're wrong, sometimes you're right. Simple as that. The fact that EURA still hasn't taken this is crazy. That's crazy. Look at it. It's so close. It's so close. Yeah. So looking like Euro maybe doing us dirty here, and then it came back a little bit until we hit the first point of profit taking, or not profit taking, sorry, trade management. Until we hit here, it's whatever. We just let it run. See how that just deleted, that red area deleted? Gravity is gravity. True. Unfortunately for us, gravity doesn't exist in the market. Gravity doesn't exist, unfortunately. So for anyone that's brand new to this live stream, say hi, say hello. Ask any questions you want to ask. If you're not part of the Discord already, get your ass in there, boy. Right, let's play a game of Queens while we're waiting for this to go down. When I short, I think a lot about gravity. You channel it. You channel gravity. Here we go. So straight off the bat, we know that we have 2 to choose and 3. And so because of this, we know that we're going to clash with this somehow, right? So the easiest space to go for would be here, but we need to dictate whether we're going to use this or this, right? That is only going to clash with this, so we can go this one first. I think these are getting harder. If I'm not mistaken, these are definitely getting harder. This and this, so for now, I'm going to go here. This being the next point. That is going to be here. Leaving this open. Meaning that we are filled completely up to this point. So that only leaves that space, which we cannot do. So we need to go forwards. Cool. So now we've filled every section in the bottom end, and we filled up to here. And we have this space left. So we can only place things above here, which is doable. We can actually do that. That is completely doable. So we're going to start off with this. And then we're going to go like that. Like that. Like that. No. Like, no. See, it's too carried away. Thinking. Swap that for that. That doesn't actually help. Okay, we've got an issue. We've got an issue. So we have here, here, and here. Okay, let's just define what we have here. So after using these two, we're locked into either these two squares or these two squares. So that means that this is going to be locked to 1. Great. That then leaves that clear for this. And do we have a space clear for that? No, we don't. We need to leave a space open for this. No, 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 no. Okay, now we're cooking. We're not cooking. We ain't cooking on shit. We're not cooking on a single flame right now. We're not cooking on absolutely anything. So either here or here. Which means this has to go here. Which means that has to go there. And that can't be in line with that, meaning it has to go here. Which means that has to be there. Which is impossible for it to be there because that has to go here. But that can't go there because of this. So, not gonna lie, kind of hate this game. Kind of love it at the same time, but kind of hate it. Alright, start again. What? Clear. Yes, I want to clear the goddamn board. Okay, so I'm going to say this is going to be the line for this. We just need to dictate which point we're going to use. I'm going to go here. And then we're going to say this or this, obviously. We're going here. Then this space is going to be applied to this because it can't go here based off of that. If that moves across to there, it's going to clash with that. So that goes to there. It gives this line freedom, right? Meaning that this is always going to be free. So we can leave that down there. So we now have 1, 2, 3, 4. These points are met. That has to go here. That is now unusable. Unless we go to here. Now, we still don't have shit. I like the way I'm like, let me cook, and then nothing happens. Nothing happens. Yo. Well, I mean, at least Naz is running, right? I don't think Euro's doing anything. No, that's probably going to stop us out. Again, this is what I was saying earlier. I personally looked at this and said, nah, I don't like that idea. I don't like it. But we take it anyway because the model that we're trading tells us to take it. Whether it works or not is literally irrelevant. That's part of the statistics. It's how a trading system works. On statistics. Not on how you feel. Let's zoom in on this so it's a bit easier for you guys to see. Not liking it. Right, so I'm going to put that there to keep it out of the way. It's in the center line. It's out of the way. Then we're going to go for... No, that's impossible for that to go there. The problem is with this, the further you come down, the more you're intruding on like this middle area. Obviously, this only has 2 spaces horizontally and vertically that you can go in. This only has 3, so again, this is the same 2 horizontally. So we don't want to infringe on this too much. We want to sort of give ourselves free range on that. Because there's so many long ways here, it's most likely going to be one of these. Now you do have this like crosser thing. Which you can use. I find it annoying because every time you want to clear one, it adds a crown. So we're going to go here and we're going to go here. Please. Which completely invalidates that point. Okay, that's fine. It also invalidates all of the high, all of the low, this. See, now look how we can't put anything here. So that has to go there. Bearish gap on NAS 100. Good. That's what we want. That has to be on this line, right? That has to be here. So we can go here or here. We can go there. Cool. And that means that this can go here. That can go there. No, can't go there. Fuck this game. Hint. That's the hint. The highlighted cell is incorrect. Thanks. You know what? I don't want to play this game. I don't want to play this game. I'm giving up. I'm normally all about it. I quit. How do you quit? There you go. I quit that game right there. So NAS 100 running beautifully. So when we look out on the scale of it, we'll go, that's so unrealistic. Why are you trying to do a 1 to 13? Well, we all know, using the rule set that I have shown you guys, there is potential for it to deliver that move. Doesn't mean it will, but there is potential. Ultimately, we're looking for here. That's what we're looking for. When we get to here, we're going to secure our positions and we're going to look to protect this trade overall. So it doesn't matter if it goes down and back up. Doesn't matter if it goes down. Doesn't matter if it goes down, does a backflip, jumps on top of your head, slaps you in the face, turns you into Bruce Lee. It doesn't matter. It literally doesn't matter. Oh, I've just moved it. There we go. Here you go. Oh. Here you go. Alrighty, righty. I just grabbed the coffee. I had a phone call, so I thought I'd take that opportunity to grab a coffee. So euro, yeah, that's coming down. So that's pretty much doing what I thought it was going to do. We take a loss, we take a loss. At the end of the day, it doesn't really matter. What is that grey line? What is that grey line there? What? We can see it on the 15-minute time frame? I'm confused. How are we seeing that? And what is that highlighting right now? What the fuck? Okay, so this is a line I don't know what it's highlighting right now. I mean, it's showing something on the 15-minute time frame. Is it a 4-hour low? It is a 4-hour low. Is that is it? Okay. Right. That's interesting. Okay. Interesting. Okay, so there's something going on there. I'm not sure what, but something. We'll get that sorted. Okay, so we have New York Open coming in 20 minutes. So if you did decide to follow me in this position, which if you did, great. If you didn't, it's whatever. I just realised it's showing one here now as well. Very interesting. Okay, yeah. But what I was saying, sorry, that really threw me off. What I was explaining was if you want to protect yourself when you take out these short-term lows and you go break even for New York Open, you can. That's fine. If you're just going to wait for it to run this major low, then go break even for New York Open, you can also do that. Remember, guys, we literally explained everything before this trade took off. We explained everything. We said now is the time where you can look to get involved based off of X, Y, and Z. We're looking for potentially that downside move. And then based off of that, you can follow into what we are now seeing. Remember, you can learn every single step of that with the Keep It Simple series, which you can find right here on the Pip Surfing Society YouTube. So we're now getting into the 2 hours, 15-minute time. So we are going to shoot off before New York Open. Okay, liquid, high, low. That'll be the low, right? Yes, so we got stopped out on that. Or have we just kissed it? Just kissed it. Then I still got the orders running here. Okay, on my broker, I have this wick. I have a wick down here. So my stop's actually lower. Let's see if I can find a broker on TradingView that has the same. So I can show you guys. Let's try FXCM. Nope. Let's try Forex. Capital, Pepperstone, and Shell Free. Okay, none of them have the same. Now, is this... That is also part of the KSI entry model. So it is kind of translating it onto a lower time frame, which is very frustrating. Cheers, Martin. Appreciate the kind words, my dude. Thank you for joining me as always. Thanks for the love. Thanks for all the support. I appreciate it, my man. We'll be back tomorrow. We haven't left yet, but we'll be back tomorrow. So I'll see you then. Another bearish gap on NAS 100. I'm going to look to secure this now, I think, before New York Open. So let's wrap it up on a positive note. As I've always said, the trading ability for each person is not dictated by the fact that you are smart or you're not very smart, or the fact that you're rich or you're poor. It's always dictated by the willingness of you to apply a system that you have spent the time to learn on a chart consistently, regardless of the way you feel on a given day. That is it. Take it from somebody that failed all of their GCSEs in school and consistently was told that I would never amount to anything because I couldn't listen well enough and I was too easily distracted. I left my 50k a year job to do what I wanted to do, which is trade full time. And I've been doing it now for over 3 years. As you can see on the YouTube, we have documented a lot of the principles that we've been using from the points we've been using them. We're now advancing into the upper end of that 3 years, and we're starting to head towards the automation and indication side of things, and we're still consistently showing you principles that will work. So it is not an impossible task, and it is not something that you can't achieve, but you need to be realistic, you need to be understanding, and you of course need to put in the work. So the moral of the story is, guys, if you are willing to put in the time, take notes, be realistic with yourself, and stay true to what it is your system is telling you to do, then you will be able to achieve the goals that you want to achieve. And that goes for every aspect in life. Stay true to yourselves, stick to your risk, follow your plan, and I will see you all in tomorrow's live stream. Peace out.